You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time for episode dose of our bi-weekly options extravaganza. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we hope so, Options Insider Radio Network. Reminding you, all of you out there, got to do your due diligence. Go out there. If you like what you hear, keep rating and reviewing. It does help new folks continue to discover the network in these ever so troubled times. These are difficult times, and new people are continuing to discover options and volatility and all this cool stuff at a record pace. So continue giving them a place to turn. Keep rating and reviewing. It does help new folks discover what's cooking over here. And of course, if you're a long-time listener, you got a question or a comment, hit us up. We do love to hear from you guys. And let's see who we're going to hear from on the old program today. First, let's go out to the quiet, the sleepy, the tranquil hamlet where it's always a bull market somewhere. Yes, it is St. Charles, where we're joined once again by Uncle Mike Tusaw from St. Charles Wealth Management, a.k.a. the guy who's just blowing up on Twitter. And let me get a updated Twitter count where, 67, we're getting up there. Uncle Mike, sir. And maybe you don't want to talk to me anymore. Maybe your head's getting a little bit too big for all of us now that you got all these followers, sir.
I don't know about that, but nonetheless, always good to be here. And
the technology gods are already smiling upon him a few seconds into the show, but we'll get him back. Listeners, by the way, you give him a follow if you haven't already. If you like his strategy block, he puts out stuff like that throughout the week at Mike Tusaw, Tosaw, on the old Twitters. Let's go back out now to that dark and stormy fortress there on the shores of Maine, lightning crashing, waves crashing against the cliffs there. Armies of villagers with torches and pitchforks marching towards the castle. So we have a limited time, but let's welcome on the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. Hopefully you can make it the entire show without getting ousted by villagers with pitchforks and torches, sir.
Yes, exactly. They are. They're at the end of the driveway. Although we had just to keep the theme going alive, we had multiple pine trees come down in this crazy windstorm we had over the last couple of days, blocking the road. So if our listeners could imagine this, we actually had trees. One could almost say that I felled the trees to keep all those villagers with the pitchforks out of the compound. So I wanted just to add to the total visual theme of what you were trying to bring up.
Oh, that's who the villagers are. They're raging environmentalists angry at you for chopping down an entire forest there in Maine. All right, with the gang assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up the tape over there. And yeah, these markets, like I said, they continue to evolve, they continue to change. And if you want to see something different, just wait 2 minutes, because now we're seeing even more red on the screen out there coming into the start of the show. S&P off about 1 1/3%. NASDAQ off a little bit north of 2% now. So NASDAQ, once again, leading the charge to the dark side. Dow off about 1%. You know, all this talk of red for the last few days, few sessions, S&P still not that far shy of the 3,800 level, 3,770 or so. So, I mean, think about it. We're not too long ago on the network, listen, we were doing our election night special, easy for me to say. We were around 3,300 that night in the S&P when we were flipping around. So, we're still we could sell off quite a bit and still be north of where we were not too long ago. So just bear all that in mind there as you're seeing all this red and maybe panicking out there. Coming at Showtime, VIX certainly reflecting a little bit of, as we say in the old Italian business, the agita, the upset stomach there. It was about 26.5. Now it's up to about 28 and change. That puts it up about 4.5 from our last show. Good old VVIX, aka the vol of vol, looking frothy, looking juicy again, up to about 122. That puts it up about 8 points from our last show. We know we like to look at that 120 level as kind of our barometer. Man, things are popping off, and it's certainly up there right now. VXX was at about a 15.5 coming into Showtime. It had threatened lower. Look, it was maybe threatening for a while there, and things were maybe calming down. Threatened that 15 handle again to the dark side. Got down to about 15.25 or so, but bouncing back up there again, about 2/3 of a point or so from our last show. And Vol Q, aka the at-the-money vol of the NASDAQ, as you might imagine, that's pretty frothy. That's up about 7 points to about a 33 kicking off the show here. So a lot of vol on the screen. Seems like Powell, as he was conciliatory earlier, now he's maybe spooking people a little bit. Either way, adding fuel to the red fire on the screen. Let's see if we can get him back. The uncleest of Mikes. Let's see if the technology gods are smiling upon him. Uncle Mike, sir, are you back with us?
I am here. And
right.
yeah, life was good from the standpoint of today's market until the Fed spoke. So probably around, 11 o'clock Chicago time. And then we've had a 2% drop in the S&P ever since. And that I think his words were along the lines of, I've noticed the bond yields, and he sounded very dovish. And then all of a sudden, people wanted to short bonds again. So apparently the 10-year note just isn't low enough for the masses, I suppose. But nonetheless, I think just we need to realize with the bonds, and that I still like to say that when we had that sharp bond increase, when the Fed made the rates close to zero again about a year ago, a lot of times when you have situations like that, it's a little bit of an overreaction because there's just such a rush to safety, so to speak. And now it almost feels like the rush to safety is coming off. And I kind of think the yields are at a fair price right now, quite honestly. Maybe a little bit higher, maybe a little bit lower. That's not for me to decide, of course, but it's by no means a bad thing. If you've been short the bonds, in terms of what I've been doing, I continue to sell covered calls, and selling covered calls has been a pretty good hedge to a lot of our bond holdings of what we have here, and very happy I've been doing it. But I really don't see a major bond drop. Like, I don't see our bond treasuries dropping 8 to 10% in the next couple of weeks. But in 2021, anything's possible, of course. But for the time being, I'm just going to continue to sell premium on this. And for some reason we have a sharp reversal in bonds, then we'll wheel it deal it to the upside if such a thing happens. And that's kind of our plan right now. In terms of where we are with the S&P, this is kind of like a Malox market for me this week, in that I'm short premium, and a lot of my puts are, not a lot of them, all of my puts are still out of the money at this point, but it's like, I really don't want them to go in the money. So I'm still okay for the time being, but the vol increase is not pleasant to look at whenever you have short premium. But nonetheless, we'll manage risk and we'll carry on and do what we do. But that's kind of where we are right now. So I'm just kind of white knuckling this for the next few hours and seeing where we're at with it. And but if it gets close to it, I won't be shy about getting out of it and managing risk and doing what we do. So I think the bottom line with all this is that I really wish the Fed wouldn't have said what they said today, because that kind of bothers me a little bit with where they're going. I guess just maybe to add to that a little bit, we do have crude oil really going up a lot higher today. So what's really holding up what markets we have at this point in time, we actually have energy stocks. XLE is actually up 1.5% on the day, in that I believe that OPEC said that they're not going to increase production as much as a lot of people expected, and so value of oil went up. So a lot going on today in the world, and it's been an exciting hour, this last hour, to say the least.
That it has indeed out there. Steve, it's still exciting to see if he has dodged the villagers for another few minutes. Mr. Rock Lobster, I know you've been talking for a while, and it seemed like maybe we might be seeing vol, capitulate for a bit there. You were talking about your VIX 21 puts and things, of course, in the last week and change. We've seen it in the other direction. VIX instead closer to threatening the 30 handle right now than it is the 20 handle again. So what is lighting up your tape? And indeed, what is our good friend Volman? What's he keeping an eye on these days?
Well, I think in general, so I wrote you just internally at Option Pit, the VIX curve, it was in a very weird place. I think we had a yellow signal, which is kind of, 6 and 1/2 dozen the other signal. And, you have this very high contango, and the front end of VIX was through the front month future. So what that means is, you think it from a forward vol point of view, they weren't really bidding the front end of the curve up yesterday. There wasn't that, it was a very ho-hummy type of market. And there wasn't there wasn't a huge bid for the short term, basically. And we were looking at that, and in our pro chat, the short-term vol was relatively cheap, like flies and stuff like that. They're all priced pretty well. I closed some this morning, made a little bit of money maybe on them. But I was leaning a little long, so really the flies just bailed me out of losing money. I walked away just kind of clean. But, and I was looking for the run to 4,000, I think, like everybody else was this week. And as of right now, I'm kind of getting that part of the trade. It was hedged because I owned some put flies and SPY, but I don't think it doesn't feel like 4,000 is going to happen anytime soon. Now, so from a VIX point of view, the market basically, you remember right in the old days where you would just pump stuff up so much, right? And you're kind of short puts and short stocks. So everybody has to put themselves in the liquidity provider position. If they're long vol in the front short term, like long gamma, like long weekly puts and stuff, but they're short options in the back, they actually are net kind of back spread. They have a smile, an up-pointing smile curve to their position. So if the market goes down, the vol can go up, right? And they're going to take a unrealized loss on kind of their short Vega position. But as long as they're long gamma, they can kind of, stay the course. And I think that's kind of what's happening. So even though we're down 1.5%, which is, it's a little bit over like a 22 vol, right? We have a 22 vol move today, but VIX is already 28. So the liquidity provider has been way ahead of the down move. They have charged a lot of money for puts. They've charged a lot of money for SPX protection. They've jacked it all up, and they're kind of weathering it. So I would say, can the market go down? Yeah, of course it can. It can go. We go to 370, 60. Who cares at this point? Frankly, I'm surprised it's taken this long because there's been a lot of weird conflicting stuff coming from the government. At least I think the way economic policy and stuff was coming out. But there was also trillions of dollars being thrown at it. So, we have some crazy spending packages. Not sure that money is going to really who needs it right now, which is basically people that have been thrown out of work. So again, a lot of weird currents. The market was basically floating up on a lot of liquidity. And I guess Powell, maybe he's like, maybe we don't need all that. So I don't know how SPX will deal with it. I think it's good that bond yields go up. I agree with Tusa. It's high time. It's high time, I think, people kind of get back to work and all that kind of stuff. But of course, that's a political decision. It's not my decision. But as you can see, like you're looking at a product like VXX, like, SPX is down 50 handles. Okay, VXX is up 54 cents. Like I own some 1727 call spreads, and I'm going to be lucky to break even off them and maybe try to ride the puts down over the next several weeks. Because I kind of trade that way, and I'm just not getting anything for upside. You can't. There's no bid for it. And again, I'm not going to run to the exit now and sell it. I don't care if I sell it for a little less later. It doesn't really matter that much because I figure I can make it another way on the downside. But you're not getting, you're not getting the real jack out of this. And that's, and that I think is also a symptom of the vol has been pre-baked in price-wise, pre-baked in. So, vol can definitely go up. The market can still sell off, but there was definitely a little bit of bake in here as we were trying to get to 4,000, and we just haven't, and we're not getting, we just haven't gotten that big sell-off yet. We just haven't. It just hasn't. But vol has been bid. I mean, VXX and the vol futures can't even make a new high right now when SPY is making what appears to be close to a low. We're only one handle off the low. So I think the vol trade is tough. I think there's vol fatigue, meaning it's already been expensive relative to the move for the most part. It's just hard to make money trading vol. And that's where we are. So I don't expect a lot out of VIX unless we have like a real, I say we need at least a 2.5% to 3% day to get the VIX to move really, anything more than maybe a point or two from here. I don't think it's going to happen. But it could. It would be great for me, but I don't think it's going to happen at this point.
Let's see what is happening out there. A little more paper coming in on the VIX front. It was 330,000 a few minutes ago, now ticking up to about 376,000 contracts on the tape. So a little bit more of a flurry of activity kicking in. That's good because the ADV on VIX has actually ticked down quite a bit. It was 710,000 contracts about a week ago. Now it's 630,000. So coming in almost 100K over the course of the past weeks. That reflects last week. Not exactly the most active weeks. Let's see if today can move the needle a little bit. Looks like pretty good chance of that if they stay on this current clip here. SPY doing decent paper as well, about 3.1 million contracts on the tape as of a few minutes ago. The ADV a little bit north of that, about 4.16 million or so. So we've got a million more to go or so out there. And SPY land certainly seems like it could easily hit that. The S, 704,000. The ADV about 1.2 million. The Qs, now that's where we're seeing the action. No surprise. Qs leading the dance. 1.75 million contracts on the tape already as of a few minutes ago. The ADV is 1.15 million. So the Qs on fire today, threatening 2 million contracts already. Just at the early portion of the show. And small caps doing pretty decent paper as well. 434,000. The ADV 678. If you want more small caps, we'll be talking about them a little bit later on TWIFO here on the network, listeners. Let's see what's going on now from a single name perspective. What you crazies are slinging out there when you're not slinging indices. Cost you 284,000 contracts to break into the top 10 right now. That's a fair amount. And that gets you all the way to our friends across the street yet again. Boeing, 284,000. Boeing, not shy of making headlines these days. Usually not for the right reasons, but it's all translating into a decent amount of paper. 284,000 contracts. Number 10. Number 9, Facebook back in the top 10. I haven't seen them in a little bit. 332,000 contracts on the tape there. Number 8, Now we're getting memey, listeners. It's Game back on the tape, 420,000 contract. Let's see where Game is hanging out right now. 120 and about a half, off about almost $4.50. They've had the range of about 116 to about, looks like 125 or so today. So yet another day that ends in Y. Crazy one for Game. Number 7, the newest addition to the meme stock palooza. This is Rocket. Rocket, 424,000 contracts on the tape. They're trading almost $27 right now. They're off about $1 and change. They've had a range today of about, looks like 30 and a quarter down to about 25 and a half. So almost 5-point range on the day. But still, this one has been all the rage of late, is yet supposedly the next big target for the Squeezy McSqueezerstein crowd over there at Wall Street Bets. And right above it, AMC. You got a meme palooza here. Game, Rocket, and now AMC. 493,000 contracts for number 6. Number 5, GE, going complete opposite way. A little bit more staid, stolid. Some might say boring name. GE, still good for 545,000 contracts. It says, hey, meme kids, hold my bear, and I'll do some real paper for you. Number 5, GE. Number 4, NEO. It's always active these days. 651,000 contracts. Number 3, it's kind of been locked at number 3 for quite some time now. It's Palantir yet again, already threatening 1 million contracts today. 910,000 contracts. Let's see what's going on out there in Palantir land. You know, it's one of the few names kind of bucking the trend, up 1.2% to 2388 today, and was trading for a while. That was like north of 25 and a half. So Palantir managing to buck the trend of late. This one's kind of been all over the place over the course of the past few weeks. Of course, also well off its highs of back about almost a month ago, February 9th, when it hit 38 and change. But still, this sell-off is not mitigating the love for the options in any way. 910,000 contracts. That means it's threatening to unseat Tesla at number 2 with 979,000 contracts. Number 1, still the big dog, still wearing the crown. 1.25 million contracts for Apple. So another day that ends in Y. And all these other meme stocks get all the headlines. Meanwhile, Apple's there just, okay, sure. We'll take all your paper and double it, triple it, and keep on rolling out there. So active stuff across the board there in our most actives here, at least for this portion of the way into the show. Let's see what's lighting it up from an earnings vol perspective. You know, there are a lot of single name events lighting it up this week. You know, everyone gets caught up in macro madness with the Fed and everything, but a lot of big names still popping off these days. Let's go on out and see what we got on the calendar this week. We had Monday, Neo and Zoom Video. So 2 big names out there. Tuesday, Target, Kohl's, Nordstrom's, and HP. Wednesday, Dollar Tree, Wendy's, Marvell, and Splunk. Thursday, we had Kroger's, BJ's, Michael's, Costco, and Broadcom. And tomorrow we have Big Lots. Let's pop off a couple of these. Let's see. These are hot off the presses, earnings move results, and earnings season reports. You can get them for yourselves in your hot little hands completely for free. TheOptionsInsider.com. Let's go out to Costco here first. They are popping off after the bell today. They were at $323.92 going into this report. They were pricing in about $9.50. In the past, they moved $7.50. So a little bit of extra juice in the in-person grocery / whatever. You can get anything almost in the Costco warehouse these days. Interesting to see a little bit of extra juice being priced in there. Work, a.k.a. Slack, also popping off after the bell today. They were at $40.25. As of this report, they were pricing in $3.45. In the past, they moved $2.42. So a little bit of extra juice in both of those names. Interesting stuff. We also got Fossil popping off a little bit later. They're on the 10th. Fossil Group make all those watches and smartwatches and everything else. They were at $16.08. They were pricing in $2.06. In the past, they moved $3.13. So a little bit light juice on that front. Also, Oracle on the 10th next week. They were pricing in almost $67, $66.91. In the past, they've moved $3.16. In the past, they moved $3.46, and they're pricing in $3.16. So a little bit light on the juice front today. On Oracle, we got some earnings. We have more. We have, Stone Cold, a.k.a. Stone Co., a.k.a. a name we've been talking about a lot in our odd block of late, is popping off next week as well. They were at $82.31. As of this report, they were pricing in $7.38. And in the past, they've moved $9.02. So good old Stone Co. They've had a lot of unusual options activity of late. We haven't seen them in a little bit, but I'm sure they'll be back. And certainly, they'll probably have some stuff on the tape next week heading into their earnings. In terms of what was popping off Earlier today and this week, we have results reports as well. We have Marvell was yesterday after the bell. They went into this report. Actually, they went to their announcement 45 and about a half. They were pricing in 6.7%, and they delivered 7.2%. So a little bit of outperformance there from a vol perspective for good old Marvell. Let's see how that's trending right now. Let's see. Marvell actually selling off hard right now. 4 3/4 again, or 10.5% today. So you factor in that move. They were 42.30 at the time of that report. So they're off another $1.50 from there. So they've actually about 10% sell off. So a substantial outperformance there. And then we have a name that was kind of hot on everybody's lips for a while there. They're one of the hot new names everybody was looking to sling. Haven't heard them as much lately, so maybe they kind of came and went. This was Snowflake, ticker symbol SNOW. They were popping off after the bell yesterday as well. They were 247.03 as of their announcement, so fairly rich. Let's see. As they were pricing in 9.5% vol, and they delivered, as of this report, 4.3%. And looks like they were at 236.41 as of this report. They were selling off. And now it looks like they're in rally home mode, up 8.5, almost $9, or 3.5% to 255.75. So from a net vol perspective, they've swung quite a bit. So if you expand that frame of reference, you're actually looking pretty good on the vol buy-in front. But Snowflake looks like maybe bucking the trend as well of crazy runs. Still, speaking of crazy runs, they're also well off their highs. They hit 388.96. Actually, they hit 390 even back on December 8th of last year. This is one of, obviously the hot IPOs of not too long ago, listeners. And it looks like they popped off early in September, right around 250. So actually right now, where they are right now is pretty much right back to where they were at their IPO level. So it was a whole bunch of nothing net since their IPO, but they had an interesting run. And we'll see if we start hearing about this name again as they're moving a little bit. Let's see. So far, the season report, it has been revised. They're constantly revising and adjusting it over there at ORAS, listeners. And right now it stands at a 77% average. So if you paid $1 for your volatility basket, you got 77 cents back so far in terms of bang for said buck. The best weeks were week 3, 95%, and week 4, 99%. Ever so close to breaking even there. Every other week was firmly in the red, with the worst week being so far. It looks like so far this week, 52%. But again, we're not done for this week yet. So interesting stuff. Yet again, another season where the vol buyers, outside of a few aberrant names, seem to be getting it handed to them. Let's see if our Eye of Sauron can change the script around. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we unleash our Eye of Sauron and see where it fixes its fiery gaze today. It looks like we're going overseas a lot today, listeners. Looks like Eye of Sauron's got a little international flair today because we're looking at a lot of ADRs. In particular, let's kick it off here with everyone's favorite, ITUB Unibanco Holding SA, a.k.a. ITUB. ITUB, obviously an ADR. This is a Brazilian, easy for me to say, financial services company over there in Sao Paulo. And it's trading right now $4.73. A year ago, it was looking pretty good. It was looking at about $7. Of course, this is March 4th. So obviously it was right before the madness had unfolded pretty badly. Before that, it was trading in December of 2019. It was trading $9.11. So this thing has had a little bit of a rough run out there. And then so far here, let's see, it sold off, got down to about 348 in the great nadir of March. Or actually, this one looks like it hit its nadir in April, a little bit later. It kind of rebounded, then sold off, had a couple of false starts there. Then you know what it did. It rallied all the way up on June 8th, of course, listeners, to 585. And then promptly sold back off again. By October, it was trading 389 again. So June 8th, that magical day for a lot of names out there in the space. And then peaked again on December 10th at $6.30 before beginning a long sell-off again to where we find ourselves right now. March 1st, it was 443. It's had a little bit of an uptick of late since then, up to now 473. It's up 19 cents today. So a couple of sessions has been good, but overall the trend since December 10th has been decidedly downwards. Let's see what our Eye of Sauron found, and it's a pretty sizable one, particularly for this name. 19,660 of the ITUB. I just like that. I like that handle. Makes you think of an Apple bathing device, an ITUB. ITUB June 5 calls going up for 44 cents, lifting the offer, it seems like. Of course, these are suspiciously tight. There was 43 cents at 44. So maybe something was parked in there. I don't know. Interesting. I'll have to dig a little bit more into this one. But let's see. The stock was 479 when they put this up. It was a 56 vol, if you are so inclined, listeners. The next earning is not until May 3rd. So this is not an earnings play. So Mr. Rock Lobster, it seems like, again, I'll have to dig in to see if anything else was parked in there because I'm suspicious of that very tight penny-wide market in a name like ITUB. But it seems like someone is gobbling up a whole heck of a lot of June. Actually, I take it back. There are earnings in the cycle because these are June. These are the June 5 calls. So this is an earnings play. I thought it was March at first. June 5 calls going up for 44 cents, lifting the offer nearly 20,000 times, Mr. Rock Lobster. And everyone's favorite name, my new favorite ticker, ITUB, sir. What are your thoughts? I can't stop laughing at ITUB.
I know. You know, my closet theory is you only pick the odd block names because you like saying.
I have no control over the Eye of Sauron. It is its own mistress. It goes where it will, sir.
Yes, ITUB. What is this? You have to say it with the Portuguese thing, you know?
Allow me to add a wrinkle to your analysis, sir. I think I was right because there are a total of 57,000 of these have traded now today.
Yeah, you know what? I think recently, I think the ETF for Brazil is EWZ for our listeners. I like to trade Brazil only when the government does stupid things. So here's my little trading tip for our listeners. The Brazil trade is interesting like once a year, basically. So ITUB is definitely a stock that is there. But if you pull up a chart of it, I don't know if he launched a gas freeze or something, or a price freeze, or he wanted to control the prices of oil through PBR. But not long ago, the index was trading $36. It had a low of 31. So the whole market basically dropped 20% when he made that, just flat out. Bolsonaro, I can't quite do his name right. But anyway, so a bit of an opportunity there. And I think what's happening is some money is coming back in. And ITUB is one of the two bigger banks. I think Bradesco is another big one. I can't remember the symbol, BRAD, I think. Banco Bradesco. I'm a little bit slow on the name. I'll get the symbol. It'll come back to me in a minute. But yeah, I think people are playing the bounce, and I like to do this in EWZ. Usually you get a decent trade once, twice. Usually around the elections, it could be interesting because everybody's freaking out because you never know what's going to go on over there. So you kind of wait till basically everybody gives up on the country and EWZ is in the basement, of which PBR is a big chunk of that index, I believe, of that ETF. So yeah, I like this as just a bounce play for Brazil. They're grabbing one of the bigger banks and going for it. So I think the very reasonable play. Stock was $6 at the beginning of 2021. So, it's what I'll call a cheap but healthy shot on a higher price.
Does seem to be the case, listeners. If you're looking for a cheap little shot, and also I got to imagine I'm having a hard time pulling up their options right now. But I got to imagine these upside calls are still heftily bid, so maybe some interesting lower cost opportunity. I know our audience always likes those in terms of things that aren't $2,000 underlying, so they could maybe do a little bit on the speculative side and have some fun and not a heck of a lot of risk. Maybe some interesting verticals are afoot out here. And everyone's favorite ticker, ITUB. It brings a smile to the inner 2-year-old in me. All right, let's go on out to our next name here. Our Eye of Sauron, kind of all over the place, which is kind of fun today. All disparate areas and industries. Next, we're going out to Vonage. This is ticker symbol VG, trading $12.69 right now, off about 61 cents or about 4.5% right now. This is the name that was trading $9.15 a year ago. It sold off down to $4.18 in the Great Nadir, and then promptly rallied up to about $10.76 again on June 4th, a few days earlier than June 8th, obviously. And then it ticked up again, one of the few names to surpass that level. By August 5th, it was trading $12.75, so not that far from where it is right now. And then it looks like the rest of the time here has kind of been a bit of a holding pattern. It sold off a bit in October down to about $10.50 or so. Then it rallied back up to where it is right now. Got up to about 14 and change a few times. One time got up to 15.35 back not that long ago, back in February 12th. Then it seems to have sold off. And that was kind of it for in terms of big breakout moments there. The rest of it has kind of been vacillating around this level that it is right now. Let's see what our Eye of Sauron found. It found, looks like Jan upside to the tune of 7,515 of the, these are longer term, Jan 2022, 15 calls going up for $1.85. So a nickel off of the offer. These are going up on the Philly. The stock was $12.73 at the time, so a little bit higher. Let's see. Earnings are on May 6th, but obviously there's going to be a few cycles between now and next January out there. 55 vol, if you are indeed so inclined, listeners out there. So Mr. Rock Lobster, this seems like kind of an old school odd block coming in, a name that's kind of been vacillating a little bit, but it has sold off recently from its highs a few bucks higher not too long ago. So maybe someone playing a rebound, they're giving themselves some time if that's the case. They're paying about $2 almost for a $12.68 stock for a call that goes out next year, sir. What are your thoughts on this one? Longer term call love in Vonage, Mr. Rock Lobster.
You know, sometimes when people pay up a ton for these, it makes me scratch my head a little bit. Do you have that same head scratching? Does this trade give you? I
do. That's why my head's always bleeding and my scalp is so patchy because of all the head scratching.
I'm of the same mind. Of course, I'm head scratching because did I sell any calls in this vol rally? Did they take one call from me? Ask me. Did they take one call from me?
Mr. Rock Lobster, did they take one call from you?
No, they did not. So I'm all up in arms.
I could tell you're more ornery than even usual, sir.
Yeah. So, but why the hell would anybody pay $2 for this call? Tell me, sir. Why? Why are you paying $2 for this call? Where do you think? I mean, I look at this and I don't think people really realize. So you're buying that call, and what does it take for that call to make money relative to the vol hit you have to take when you buy it, right? So you're buying that call, and I can see if you think the stock, you're buying it because you think the stock's going to go to $20. Now, in that case, I say sure, $20 maybe. You can make the case for it, and in that way you would get a double, right? So, you know, they for sure would make money. That I think the 1 year high of the stock is $15, so they've got some pretty lofty aspirations for it. But you know, I don't know. I think I'd rather just sell the 12 puts. Let's see what you get for selling the 12 puts. Like, I would be surprised if they could make $1 or $1.50 on those calls. The stock would have to do something enormous, right? You could sell the Jan 21, the Jan puts for. You could get at least $2 for just selling the puts. So, you know, I'm a little bit of a head scratcher there on this one for me. As to why you would want to go buying that put, yeah, you could easily sell the puts for $2. I think, you know, it would make maybe a decent risk reversal. It's the same risk as the stock, but if the stock doesn't do anything, at least it just doesn't cost you any money, right? If it just stays here. And, you know, also too, one of the first rules about buying calls is the first day you buy them, it's always sad when they're offered a dime lower right after you purchase them, which is never a great sign.
Never a good sign. Also never a good sign when the Rock Lobster is like, how are you going to make money on this? Because you're right, it is challenging. Good thing the Viceroy is in here because he would also take a dim view of spending nearly $2 on calls for a $12 name. I won't beat that dead horse. Instead, I'll go out to our final name. Like I said, our Eye of Sauron's got a bit of an international flair today, ending our day in YPF. This is a Argentine Petroleum Refining, ADR, ticker symbol YPF, trading right now $4.38. And let's see, up about 39 cents. So a good run out there for them, up nearly 10%. A year ago, they were trading 8.25, so obviously way higher. And they sold off in the Great Nadir to 2.25. So this one's been moving a little bit. Then they rallied again back to 681 on July of last year. Then they promptly sold off yet again to 332. So they haven't exactly been fully tracking the price of oil out there, because this is not exactly, if you listen to our TWIFO show, what we've been seeing out there of late. But of course, of late, oil's been on a decent run. This one looks like it topped out again at about $5.50 on December 10th. And then sold off again down to about, looks like, $3.25 again, not that long ago, a couple of months ago, late January, month and change. And then it rallied again to $4.74, then sold off again. And now it's right about $4.38, having another good run today. So this is a pretty volatile natural gas and oil exploration, transportation, and refining name. And I think the only thing you could say with the YPF options activity today is WTF, because there's a lot of it. To the tune of the April 5s, that's where the action is, listeners. And there's a whole bunch of action. We first noticed 5,534 of these going up for 50 cents. So lifting the offer out there. If you're wondering, by the way, listeners, that was a hefty, a juicy 117.6 volatility. The stock was 442. Earnings are today after the bell. So this is a pre-earnings palooza in terms of action, listeners. This one certainly is the kind of action that makes the hairs on the back of my neck start to perk up and say, let's see. Also, then we saw 1,782 more of these calls going up for 65 cents, 1,310 more for 59.7 cents. You get the idea, listeners, and so on and so forth. Actually, we have an earlier print here for 45 cents, also lifting the offer. That was at 109.9 vol, a little bit more reasonable vol there. Total so far of 33,000 of these things have traded today. Most of them lifting the offer, are pretty close to it out there. So we got a little bit of a WTF call palooza, Mr. Rock Lobster, in a $5 name. People paying roughly 10%, if not more, of the value of the stock for these calls that go out in April. But even more interesting, adding a little bit more fuel to the fire, there's earnings today after the bell, Mr. Rock Lobster. This is kind of vintage odd block stuff. I kind of like this. This is old school, loading up on calls right before the event, crazy mad palooza. This is kind of what the Eye of Sauron was made for, sir.
Well, so I had to look at YPF because it was ringing my bell. Yet another possibly nationalized South American oil company. Can you think of a worse South American oil company? And this is Argentina. So it's one of those where who knows what it's worth. I don't know if the government, how much they own of this. It's like PBR, the government owns quite a bit, so they can really slap it around a little bit when they feel like it. But I would say here in this one, this is a bit, can this be a recovery play? Well, let's just take a look here, right? So look at where so a lot of oil stocks were basically in the basement in, April, right, down to 273. This stock has managed to almost double from there. So don't get me wrong, it actually made a move and still trading well below where it is. So I think, when you buy the stock, you buy Argentina, you buy all the Argentinian problems, I think. Do they all want to make a run higher by buying all these calls and going for the whole, YOLO moneymaker? Sure. But this stock has an awful lot of weight behind it because it looks like a cheap oil play, but I think it really has, I think it might have some operational troubles out of Argentina, but I don't know how big they are, but I don't think it's something you can discount. I don't think it's something you can discount with this particular ETF.
This is definitely something we're going to keep an eye on because this is going to pop off after the bell today. So we'll probably know pretty quickly what is afoot and how these are playing. What are your thoughts? Are you guys YOLOing out there in YPF? Is it something else afoot out here? Either way, there's quite the palooza of paper going up out here right before earnings, which is always an interesting time. If this thing rockets north, it'll certainly be fascinating to watch. We'll be keeping an eye on it, but now it's time to keep an eye on what you folks have on your brains. It is time for the Thursday Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is where we get your questions and comments. We also ask you guys some every now and then. We have a poll going on right now, given what's been going on out there of late in the crypto space. I encourage you, if you like that stuff, check out our Crypto Rundown program every Monday, right after the option block. So if you like this show, you probably caught that one. And we asked you after that show, we said, Bitcoin exploded onto the radar in a very big way in 2021. Many people still think it needs an ETF to really, in the U.S. at least, before it can break into the mainstream. So we asked you quite simply, will we have a Bitcoin ETF approved and launched in the U.S. in 2021? Yes, no, or I just want some Bitcoin options. Right now, it's still active, by the way. You can go over to @options, make your voice heard listener. I think there's a few hours left. Yes is winning the day by a pretty far margin, 60%, no 18.8%. And I just want some BTC options holding firm at about 21.2%. I'm with you on the latter bunch. We got the CME ones. They're kind of big and beefy, not really doing a lot of paper. There's the mini ones at Ledger X. That's certainly an option, pun intended. But outside of that, there's certainly nothing even close to like the Deribit paper that's going up out there for U.S. customers. So it still is kind of a wasteland, which when you think of it, it's an asset that's moved from sub $1 to north of 50,000 with no real options market for the U.S. audience. It just makes me sad. But let's see out here. So we have, it's like this handle, 686 Ebullient Prism. That's one chiming in saying, on our poll for some reason, I just like this. I use the Eurodollar pit for crying. Okay, so there you go. Thank you for that, Ebullient Prism. Mr. Uncle Mike, question for you here. First off, I want to know what are your thoughts here on the notion of maybe we'll get an ETF for Bitcoin in the U.S. this year, yes or no, with our audience. And then B, Mr. Unlimited in our chat wants to know, since you're such a big shot on Twitter, where is your blue check mark, sir?
Where is my blue check mark? All right, well, so in terms of where's my blue check mark, what's a blue check mark?
Well, there you go, Mr. Unlimited. Now, that's your verified status, that you are indeed who you say you are. You are # Uncle Mike, sir.
I will look into the blue check mark. So there we go with that. But in terms of the Bitcoin ETF, I think that I'm surprised it hasn't happened, quite honestly. I mean, I know that there's definitely got to be a lot of interest with it. So I'm surprised it hasn't happened. What does still surprise me even more, though, is just the wide bid-ask spreads that exist on options on Bitcoin futures. That's probably the thing that surprises me the most of anything with it. So with all the interest that there is in it, apparently people are just trading other instruments for Bitcoin and their options, like Riot or things like that. But I'm really surprised that there's such the wide bid-ask spreads with Bitcoin futures options.
Yeah, it still is unfortunately not the most liquid. The futures are tearing it up, doing 20,000+ contracts a day. The options, they struggle to do 50 on the CME at least. As to the blue check marks here, Mr. Unlimited, I can speak to why we don't have one at the options inside. We could have had one obviously many years ago. It just, I know they used to require 2-factor authentication for all that kind of stuff. And we have a big team here. It's not just me behind the scenes posting stuff. A lot of people are out there putting up content to our Twitter feed. And it's just hard to have everyone have the same kind of 2-factor authentifying all the time. It was a huge pain from a login and access perspective. So we just didn't go that route. I think Uncle Mike might have a little bit easier. It's just Uncle Mike out there, putting stuff to his so he could log in and make it easier for himself. For us with a distributed team, it was too much of a burden. I think maybe they've amended that. Maybe we'll look into that again. But that's why at least we don't have one over there at options, even though someone asked us the other day if we were the first people to tweet about options. I never thought of it that way, but it's quite very possible. We obviously have at options. We were very early on the Twitter train, obviously. So it is quite possible we were the first options tweeters out there. I don't know how to verify that, but I think our handle is a pretty good inclination that we were at very least very early. Mr. Unlimited's giving you a hard time for your 60 followers. He's huge. He's blowing up. He's only been on Twitter for like a week or so. So give the man some time. All right. Jason Cruz here. Jason Cruz. Oh, he's chiming in from our Monday show where we did the Wonder Years. That's right. He says, I'm listening to the show on the way into work and will now have to spend all day remembering how mad I am still at Winnie Cooper. I don't remember the end of the Wonder Years. Did she do something bad? I don't remember why he's mad at her. I don't know. But obviously, the discussion of Winnie Cooper dredged up a lot of memories for kids from the 80s, because we also had Revon Gorgeous tweeting in this cool gif of just Winnie kind of looking around all confused. So obviously, talk of Winnie Cooper and the Wonder Years clearly resonated with a lot of you out there. I just like this question. I like the way he writes it. So we'll go to Nikos next. He says, Nikos says, can you describe the delicate dance? I like that. The delicate dance between strike, delta, and option premium. I tend to buy calls when I think the stock is going to hit that strike within the allotted time frame of the option. Is this too basic of an approach? Should I be concerned about theta? Mr. Rock Lobster, I'm sure you have people coming to your mentee sessions asking this very basic but straightforward question. Hey, I want to buy a call because I think the stock's going to get there by the time the option expires. Should I even care about this theta stuff? When you get these questions, Mr. Rock Lobster, what do you tell folks?
Well, this is a very good question. I like the delicate dance between strike, delta, option premium. So what I would do is a couple of things here is the one quick thing he's not asking is he is mixing inputs with Greeks. So when I try to teach this subject, you have to separate the inputs, which would be strike. Option premium is an output to the model, and delta is a Greek. So what he's probably asking is, if I'm going to pick a strike at a certain volatility, what kind of delta is that going to deliver based on where the vol is? So option premium is just an output. So sometimes the exact same call for the exact same period of time can be $1, $2, or $3. So let's say it's an at-the-money call. You've got 30 days to go. Depending on volatility, that call can be $1, $2, or $3, right? Or any other number. Just pick a number, right? Depending on the volatility. However, the delta of that option will be exactly the same. Whether you paid $1 for it or $5, an at-the-money option will be 50 delta. So you got to ask is, when I couch this question by, if you're going to pay a certain premium, what kind of move do you expect? So generally the easy rule is, you want the premium to be relatively low versus the move you expect when you're dealing with an at or out of the money option. An in the money option has a very high delta, so it has generally a very small amount of extrinsic value. It's just you just have much more delta. So the dance you want to pick is, how long do you want to be and how much money do you want to spend? I think that's the easier way to think about it. So when you're looking at kind of, figuring out like this, that's how you want to ask the question. So that's why we were laughing before. Like, somebody's paying $2 for that Vonage call. And what it is that's a lot for about a 50 delta call. Even though it's a little out of the money, the delta is probably close to 50. So it's mostly vol sensitive at that point, right? With the delta 50, options mostly vol sensitive. So you have to decide, mostly is how fast do you think a move will be? I think it's easy to think of velocity and acceleration of a move, and that helps you pick the option you want. Like, it's going to move fast, right? You kind of want something near the money, in the money. The implied volatility is really cheap, and you think it's going to move fast. You get more bang for your buck if you move just slightly out of the money. Those options have tons of gamma at a little vol, and that could generate big bucks. So great question. Lots of ways to think about it, but it's mostly that for the dollars you're paying, what kind of move do you need to make money when you spend that money?
Yeah, I love these questions. These are the same people who write these questions and say, should I even care about theta? Who, when they do what you said, Mr. Rotlap, let's say they spend, $2 for these calls on a cheap name or whatever it is, and then the stock kind of gently drifts up, and then they lose half of their options premium right away. They're the ones who write in saying the stock moved up and I lost money. Why? So, yeah, it definitely pays us, literally, in this case, to pay attention to these things, because you need that move. You need it to happen pretty soon, and it needs to be commensurate with what you're paying. Like the Rock Lobster said, you can't be just completely outlandish, paying 3,000% volatility and expect that trade to make money, unless maybe it's a GameStop intraday. Maybe you have a chance then, but that's really about it. I was like that. The Delicate Dance. I like that. Maybe that's a title for our episode there. The Delicate Dance of between Uncle Mike and the Rock Lobster. Speaking of which, Mr. Uncle Mike, we got one more here for you. Last show, you were talking about, maybe this might have been last week. You said inverse ETFs are a great solution for which there was never really a problem. You already have the ability to short an underlying or buy puts. We had Boss Jay Cross. He liked that. He said, they're also not very liquid. As a newbie, I got sucked into trading one and I couldn't get out. I only made that mistake once. Thanks for posting this great tip. And he gave you a thumbs up emoji, Mr. Uncle Mike. So there you go. I'm sure he's one of your 67 legion of followers now, sir.
Love it. Love it. Yeah, I think that I don't think I've ever really personally traded an inverse ETF my entire life. So I'd rather buy a put.
If you ain't slinging inverse ETFs, you're just not living, sir. All right. We're going to keep living right into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, buddy. Welcome to Around the Block. This is indeed the portion of the program where we tell you what's going on out there. And right now, I should say, listeners, this thing is starting to heat up in terms of heading to the dark side out there. We've got most of the markets looking pretty aggressive. We got NASDAQ off over 3% right now. S&P off 2.33%. Dow off about 2.14%. And VIX threatening that 30 handle right now. So interesting stuff floating out there. Let's go around the horn again. Mr. Uncle Mike, what are you watching as the sell-off increases going into the weekend and next week, sir?
Well, we're negative on the year now, so it just happened during this show based on the S&P 500. So I got out of a lot of my positions. It just kind of happened during this show. So watching to see if we stay negative. And I do have a small position that's pretty far out of the money right now still, but definitely I'll be monitoring that and watching to see if we can end the day positive on the year. But as of now, we are not.
Yeah, that's a big signal for you in your inputs in your models there, Uncle Mike. Once you get negative on the year, things start changing in the house of Uncle Mike. Mr. Rock Lobster, same question for you. I'm sure Volman has his eye. Are they starting to come for your calls now, sir? Are they finally taking your offers?
They're not. I'm actually, Volman is a little bit stingy when he wants.
How much are you fading these guys? What are you doing out there?
I do like to make them. I do like to make them come for. Oh, they just did take some. So I did get a little taste during the show. Oh,
all right, that's the sign. So, that's the top of Vol now. We have hit the top. We're good.
Let's see here. So I'll just let every listeners know I have sold 10% of what I owned today on the upside. So it's not like I'm really jumping out there and letting it go yet. So I do make them come for that first taste, though. Because if vol turns around, I would rather hold on to my long vol for as long as possible. But since I do own, if I do have some like puts and stuff like that, I try to lean as far along as I can once vol starts going up. And then once it starts making some money, I'll sell it. So that's kind of where I am at this point. So short answer is, this kind of looks one of those sell-offs that looks like it's going to go to the end of the day. A position I'm trying to do right now, I'm trying to buy some SQQQ calls and actually trying to buy some VIX puts as a pair. So it's a little idea I have that it works sometimes. It doesn't work all the time. But if we do get one of those really good, nasty tech sell-offs, the SQQQ, again, it's not a long-term investment thing. It's more of a trade. It's interesting. It can be fun. And so that's kind of what I got going on right now.
All right, Uncle Mike just said he's never touched an inverse or a levered ETF in his life, and it's a Rock Lobster. I'm slinging SQQQ. So there you go, listeners. Live and learn. To each their own. Unfortunately, that music means our own is concluded, at least for this program here. If you need more in your ear holes, don't worry. We'll be back in a little bit with Twifo. Here, I'm not sure if we'll have to be able to keep the live streaming in between. We have to rejigger some stuff for the guests for Twifo. We'll be back live, though, at 1:30. Don't you worry. With all the hot stuff going on in the world of futures options, and there is quite a bit. So stay tuned for that. But before we do, let's go back around the horn. Let's start with the Uncles and Mikes. Mr. Uncle Mike, sir, if folks want to become one of your 67 Legion, where should they go? What should they do?
At Mike Tusa on Twitter. Follow me. In the coming weeks, I know I've been saying it, but in the coming weeks, there will be a weekly post with an extended strategy block that I'll be tweeting out. But be the first to get onto Twitter. You don't have to stand in line or wait. It doesn't work that way on Twitter. I don't know. Just follow me at Mike Tusa.
I know I was the first, so no one else can be the first. But how? And on a scale, real quickly, on a scale of 1 to 10, how disgusted are you with the Rock Lobster that he's slinging SQQQ?
Well, not really, because he's actually he does things on stuff that's predictably crappy. So he trades in the predictably crappy range, and he makes money on it. So God bless him.
I'm going to put words in your mouth and say horribly disgusted. Mr. Rock Lobster, what is your response to Uncle Mike's horrible disgust? And also, if folks want to figure out what you guys are up to, where should they go? What should they do?
Yeah, for sure. That SQQQ is a junk product. Like, you don't want to own it, but there are like a couple of days where, it might pay. And it does pair well with some VIX, especially because I think tech is going to do worse than the S&P 500 overall. So you got to make sure whatever you're going to do, it's doing the job it's supposed to be doing. That's what I would tell everybody. But in short, come to optionpit.com. We are growing like crazy. We've doubled our amount of students in the last year. Insane growth for us. I have to say, this volatility thing, while it's not great for everybody else, it's okay for us. Because we teach our students how to deal with it. And come on over, go to the memberships area and see what we have for sale.
There you go, optionpit.com. And on the behalf of the Uncles and Mikes and the Rockingest of Lobsters, don't forget, check out our friends over there at Demand Derivatives. Their crowdfunding still running. So all you folks out there who are gobbling up pieces of all these hot fintech offerings, you got, Gatsby over there on Seed Invest, everything else. Check out over there. It's a $105 minimum. You can't beat it, and it's doing pretty well over there. So go to demandderivatives.com. That's the link, and you click on the crowdfunding and everything else over there. Throw $105 their way. It's interesting stuff. They support the network, support the shows, and they certainly would like to see you over there with your thoughts and ideas about what's going on and the futures market. On behalf of Uncles to Mikes and the Rockingest of Lobsters, and indeed myself, thank you all for listening. I'll be back in about half an hour, a little less than that now, with all things TWIFO. If you're listening after the fact, just hit next, and then we'll see you back here again tomorrow for Volatility Views, and right back here again on Monday for another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.